All right, so let's dive into the world of investing. I know it sounds intimidating at first, right? But trust me, it doesn't have to be. Today, we're going to break down the essentials, and I promise to keep it engaging, relatable, and informative. Picture this as your Investing 101 boxed set, where we'll cover the basics of investing, real estate investing, and the stock market. By the end of this, you'll feel a lot more confident about stepping into the investing arena. First off, let's talk about investing in general. So, what is investing? At its core, it's about putting your money to work for you. Instead of letting your hard-earned cash sit in a savings account, gathering dust, and earning next to nothing in interest, investing allows you to grow your wealth over time. Think of it as planting a seed. You water it, nurture it, and with time, it blossoms into something beautiful. But like any good gardener knows, you have to choose the right seeds and provide the right conditions for growth. Now, let's get into the nuts and bolts of Investing 101. The first thing you need to understand is the concept of risk versus reward. Generally, the higher the potential return, the higher the risk. It's a balancing act. You have to assess your own risk tolerance. Are you the type who can handle the roller coaster ride of the stock market? Or do you prefer the stability of more conservative investments? Knowing where you stand will help you make better decisions. Next, let's talk about diversification. This is a fancy term for not putting all your eggs in one basket. If you invest everything in one company, what happens if that company goes under? You're left with nothing. Diversification is your safety net. By spreading your investments across different asset classes, stocks, bonds, real estate, you reduce the impact of a poor-performing investment on your overall portfolio. It's like having a well-rounded diet. You wouldn't just eat pizza every day, right? You need a mix of nutrients to thrive. Now, let's shift gears and talk about real estate investing. This is a popular choice for many new investors, and for good reason. Real estate can be an excellent way to generate passive income. Imagine owning a rental property that brings in a steady stream of cash each month. Sounds appealing, doesn't it? But before you jump in, there are a few things to consider. First, understand the market. Real estate is local, and markets can vary significantly from one area to another. Do your homework. Look at trends, property values, and the demand for rentals in your target area. You want to invest where the growth potential is strong. Next, think about your financing options. Many people assume they need a mountain of cash to buy property, but that's not necessarily the case. There are various financing methods available, like traditional mortgages, hard money loans, or even partnerships. Each comes with its own pros and cons, so weigh your options carefully. And let's not forget about the responsibilities that come with being a landlord. It's not just about collecting rent. You'll need to manage maintenance, deal with tenants, and ensure compliance with local laws. It can be a lot of work, but it can also be incredibly rewarding if you do it right. Now let's move on to the stock market. This is where many people start their investing journey. The stock market can be a bit like a high-stakes game of poker. You have to know when to hold 'em and when to fold 'em. The key here is understanding stocks, what they are and how they work. When you buy a stock, you're purchasing a small piece of a company. If the company does well, so do you. If it falters, well, you might be in for a bumpy ride. One of the most important concepts in stock investing is the idea of long-term versus short-term investing. Many new investors fall into the trap of trying to time the market, buying low and selling high. But the reality is, it's nearly impossible to predict market movements consistently. Instead, consider a long-term approach. Invest in solid companies with good fundamentals and hold on to those stocks through the ups and downs. It's like riding a wave. You don't bail out at the first sign of turbulence. Another crucial aspect of stock investing is understanding different types of stocks. You've got your blue-chip stocks, which are shares in large, well-established companies known for their stability. Then there are growth stocks, which are expected to grow at an above-average rate compared to their industry. And let's not forget about dividend stocks, which pay you a portion of the company's earnings. Each type serves a different purpose in your portfolio. so it's worth doing a little research to see what aligns with your goals. As we wrap up this Investing 101 journey, remember that education is key. The more you learn about investing, the more confident you'll become. Don't be afraid to ask questions, seek advice, and even make mistakes along the way. Every investor has a story, and many of them include missteps. What matters is that you learn from those experiences and keep moving forward. So, whether you're interested in real estate, the stock market, or just investing in yourself, take that first step. Start small, stay curious, and remember that investing is a marathon, not a sprint. With time and patience, you'll see your financial garden grow, and who knows? You might just find yourself enjoying the fruits of your labor sooner than you think. Happy investing!